Hello financial investors and welcome to the channel. Today is the 20th of July 2020. We're going to be kicking off this Monday with our Monday buys video. What exactly are we going to be buying over on M1 Finance inside of the Roth IRA account? Now in this video we start off by taking a look at the current stock futures, which are currently negative. We'll take a look at some of the upcoming markets that are currently open. How are some of the markets that are open overseas are doing right now? Then we're going to go ahead and jump over into the M1 Finance account, take a look at the activity overall for the portfolio. Is it down? Is it up? How much has it moved in this past week? The other market, we'll do a comparison between the three main indexes and the portfolio. Also look at the activity for last week. What stocks paid out dividends? There were quite a few dividends that were paid out. So we'll go ahead and discuss what stocks paid out dividends and what we're going to be doing this week with those dividends in order to make our buys here in today's video. So if you are brand new to my channel, have not yet subscribed, would really appreciate if you go down below, subscribe to the channel. If you do enjoy this video, find it helpful, make that like button blue and leave me a comment down below. We talk about the stock market, dividends, and real estate. Real estate has been a bit slow recently here in 2020. I'm currently waiting on my new property to be built. I'm buying a new 4-bedroom, 2.5 baths with an office, and I'll be moving out of my current 3-bedroom, 2 baths into a nicer home for my 2 children now that are additions to the family since we moved into this one. So when I do get my new home here in about 6 to 8 months, we'll be doing a house tour on the new real estate. And then after that, I will be able to sell my current property, take all that cash tax-free, and begin continuing to invest in real estate properties. And until then, we'll continue to talk about the stock market and dividends here on the channel, so definitely subscribe. And if you haven't checked out my wife's channel, my wife made a YouTube channel as well, Verena Simone, and she talks about mom hacks, life tips, money, budgeting. So we saved over $10,000. She went through our finances and found $10,000 worth of savings there. And then my son also has a channel, but let's go ahead and jump into the channel here. So jumping into the M1 Finance Roth IRA, we can take a look here that the cash balance here is $79.47. So there's some dividends that were paid last week because I believe we put in around $50 every single week in order to get our cash lasting until the end of 2020. So the rest of that $30 or so is mainly just dividends that were paid out last week. Now overall, if we're looking at the overall performance of this portfolio, we are up 19.33%. We have $1,039.29 in capital gains or market gains here, and we have $1,294.24 in earned dividends. That means that we have sat through the ex-dividend, and in the future we are going to be paid out some dividend that is going to allow us to have those earned dividends of that amount. Now total this portfolio is up $2,333.53. I thought it was going to be 33 cents, but it is 53 cents. So that is where we are currently at with the overall portfolio. Now, if we look at the 1 week performance of this portfolio, last week we are up 3.35%. or around $757 of market gains and $21.77 of earned dividends. So quite a bit of a market gain there. If we look at the 3.35 comparison for last week in comparison to the S&P 500, which put on a 1.25% gain, the Dow Jones, which put on a 2.29% gain, and the Nasdaq that lost 1.08%. We definitely beat all the indexes. Our portfolio came more in line with where the Dow Jones is at, but a little bit over that performance. So what exactly happened last week that pushed the portfolio up over 3%? Let's go ahead and sort this by positives. And we'll see here that our positive positions here, there's quite a few in the 9, 7, 6%. So Stanley Black & Decker, this is one that I was invested in quite a bit a while ago because it was negative in the portfolio. Last week alone, it had a return of 9.61%. Main Street Capital, a BDC, 9.31%. ABM Industries, again, this was a recent one I started buying more of during a dip. It's up 9.26. Avery Dennison, 9.2. So these four positions alone, all over 9%, put on around $200 there alone. Then we have our utilities here, UGI Corporation. We have our industrials, Caterpillar. This was one that we bought, I believe last week we bought Caterpillar because it was down in the portfolio. It is going ex-dividend, or will go ex-dividend here in July. We'll go ahead and cover this one here in just a minute. Then we have a couple healthcare companies that did really well this past week: Cardinal Health, Pfizer. I see Las Vegas Sands up here, which is really interesting to see a casino company up nearly 6.5% last week. We also see financials 5.78%, and the list kind of goes on. Now, the only negative positions last week, we had 5 negative positions last week. We had Waco Group down 4.45, Tanger Factory Outlet down 2.57, Simon Property Group 2.47, Digital Realty Trust 2.47, and Essex Property Trust. So of these, we had 4 REITs. Essex Property Trust, ESS, ELR, SPG, and SKT are all 4 of these are real estate investment trusts. So these real estate investments are not doing so well, but that is why we have so many others to kind of balance out the portfolio. Then we have Waco Group down here, negative 4.45% last week, and that's not too bad. So quite a bit of positive out there in the portfolio. Now, as far as the activity for last week, here again we purchased Caterpillar. We bought $32.67 of it, and Pfizer $32.67. So those were our 2 stock buys last week. We'll go ahead and see what we're going to be buying this week. Our stocks that paid out dividends last week were Cardinal Health, Essex Property Trust, Main Street Capital, Realty Income, WP Carey, and another Main Street Capital there of $4.92. So if we combine these dividends together, let's go ahead and go 669 plus 447 plus 0.02 plus 303 plus 1011 plus 492. That equals $29.24 of straight dividends paid out into the portfolio, and that is going to be completely tax-free in the future. This is all within a Roth IRA. That means this past week I made $30 of tax-free passive income that when I do hit, or this is my wife's account, this is Verena. So again, Verena Simone over here, this is her portfolio that we created for her, set it up, and I'm sort of just managing it for her in her investments. But eventually this portfolio over time, she's not 30 yet, so she still has 30 years until she can even begin to take capital out of this portfolio. So when she does hit that 59.5 point, and this portfolio is generating hundreds, if not thousands of dollars by that time, it will all be 100% tax free once it's withdrawn after 59.5. So regardless of how many dividends she's getting paid out, say she gets paid out, nearly $2,000 of dividends from this account, or my account in combination between the two, along with our real estate properties, all of that equity will be completely tax-free within the Roth IRA accounts. Then we just kind of move it into our bank accounts, use it as we want. We don't have to get taxed on it. It's all gravy. So that's the future of what these portfolios are moving towards. So here we have $79.47 waiting to be invested. Now, where are we going to be investing it this week? Now, if you guys haven't been watching my videos here in the past few weeks, I've been doing and using Seeking Alpha to kind of keep track of upcoming dividend dates. This is a really good tool to use to keep track of what stocks are coming up on ex-dividend. Today being the 20th, is actually a really good opportunity to, if you haven't yet bought Lowe's. Lowe's is a great company, but in my portfolio, Lowe's is up by quite a bit here. It is up 59.18%. So I'm not going to be investing in Lowe's at this time, but it's still a great opportunity for the future. This one has 56 years of growing and paying out dividends, and it's just such a solid company. Up here in the future of July, we have EV, Pfizer, and Realty Income. So of these 3 positions that are coming up in July, I want to just see if I updated this with my most recent buys. I don't believe I've updated 1 June, Pfizer and AT&T. So I haven't been updating the sheet as of recently, I do need to go back and re-update this, but it should still be pretty accurately as as far as fractional. There may have been a few changes in here, but I do need to go through here and update my shares and my new cost basis on these positions. But if we take a look here at EV, Pfizer, and Realty Income, let's go ahead and punch in EV. EV is up 5.05. Realty Income, ticker symbol O, is up 25.95%. And Pfizer is up, oh, it's negative by 0.28%. And Pfizer will be going ex-dividend. Tomorrow is going to be a red day. So in the morning, Pfizer could be negative upon open. And if the market does continue to trend lower, that's fine. We'll be able to average down in the negative. But if it does trend to the upside during the in the middle of the day or towards the end of the day, then we'll get the recovery there with the portfolio with the Pfizer. Pfizer is one of those healthcare companies. Yeah, so there is an opportunity there with Pfizer. Now, if we want to skip into August, so I'm going to go ahead and say Pfizer is a good opportunity there. We do have Walgreens, Main Street Capital, Consolidated Edison, Stanley Black & Decker, Lockheed Martin coming up in August. So of these positions, I believe Consolidated Edison here, ticker symbol ED, oh, it's right there, ticker symbol ED is down 4.16%. So this could be a good opportunity as well. So I'm going to go ahead and just mark Pfizer, ED, right there. Main Street Capital and WBA. I'm not too interested in buying more Walgreens at this time. I believe I got it to a good point. Yeah, I wanted to get it to about $900. It is at $900 now, nearly of cost basis. So I'm going to let that one sit for the time being. It's in retail, so retail is a little bit kind of wonky because they are allowing to have their doors open, but business could be a bit slowed for that type of business. So at this time, if Walgreens does decide to cut their dividend, it is at a 4.51. Say they decide to cut it to a 2 or 3% rate, that would hurt that position and also hurt the dividend. So I'm just going to hold out. I think that one's a little bit higher risk. I'll write it up here, but we'll take a look at the risk of these. We'll just discuss it. And then we have Main Street Capital. That one's pretty positive in the portfolio. That's up right here at 25.88%. Then we have Stanley Black & Decker and Lockheed Martin. SWK is positive by 10.79%. So last week alone, it put on almost nearly 10%. That put it pretty much in the positive there. And then Lockheed Martin here, 16%. So not a lot of access there. And that is basically all that's really been announced. And we don't have anything else besides Walmart up here showing up in December. So right now, what's looking like it's, what it's looking like. Where was Caterpillar at? Caterpillar was back on the 17th. So that was last week. It went ex-dividend. So that's one of those earned dividends that hasn't been paid out yet. So of these three, I'm not really wanting to risk in Walgreens at this time. I feel that position is at a comfortable level of nearly $900 of equity. Now Ed, on the other hand, Consolidated Edison here, it has only $525, and Pfizer, where's Pfizer here, is at 806. So Walgreens does have more equity invested in it versus these two other positions. So for that reason, along with the risk that Walgreens carries, and I'm happy with where it's at, I'm only going to be investing in Pfizer and Consolidated Edison. Now, bringing up our calculator once again, we'll go ahead and go back to the M1 Finance account. Now, at this point, because we're splitting up between two positions, I'm just going to take the cash balance, divide that by 2, and we're going to go ahead and invest $39.74 into one company and the rest into the other. So between these positions, they both have very nice starting yields of over 4%. So Consolidated Edison has a 4.13, with Pfizer at a 4.19, so both of those have very solid dividend yields. So here, we're just going to go ahead and type in Pfizer, locate it here, and go ahead and buy. Punch that in and continue, confirm. And then our next one back in our portfolio, we're going to go ahead and punch that in and search up ED, Consolidated Edison, and go ahead and hit buy sell. In here we do have that extra cent there, so we're just going to go ahead and change it, and we'll see that available for order, we have $0 left remaining in this portfolio. So we'll go ahead and confirm that buy, and that is it for that. So those two stocks are going to be our two buys here. We have Pfizer and Consolidated Edison. I didn't believe Walgreens. I'm already comfortable with the current cost basis. I have nearly $900 invested in that company. It's down nearly 16.5%, which isn't terrible. It is offering a 4.5% starting yield, comparison to my current yield of 3.77. So I could definitely dollar cost average, increasing my own yield and lowering my unit cost. But I already have what I feel comfortable investing at this time. It's also in the retail sector. They are, slow for business right now. I actually haven't been to a Walgreens in quite a while. I've been limiting my shopping to only a few stores, such as Trader Joe's. I might go to Trader Joe's to kind of stock up on all my equipment and food for the family. And occasionally I may go to Walmart because I do work really close to one, so I can just walk across the block and boom, I'm right there. So that's been primarily what I've been shopping at, and not so much Walgreens. So that is going to be it for today's video. Let's go ahead and pop back, take a look at where futures are at. So futures are coming positive just slightly, just very, very slightly. But we can see here overseas, the Hong Kong market is down by 0.25%. The England market is down by 0.89%, and the German market is down by 0.52%. So there they are. They are negative at the current time at market open. Our stock futures are potentially taking us into the negative, and the tech stocks that were keeping us positive these past few weeks and months, as we've seen last week, I posted over on Facebook that the FANG stocks this past week took a bit of a break. They actually pulled back, Netflix down 10%, Facebook down 4% or so, Google, Amazon all down as well. The only one that was positive, I believe, was Apple. So they are taking a break. We may see a bit of a red week this week, but don't fret. We all want a correction here of at least 10 or 15% to make us feel comfortable, right? So that is going to be it for today's video. Again, if you are brand new to my channel, I'd really appreciate if you go down below, subscribe to the channel. We talk about the stock market, dividends. If you have any questions on stock market, dividends, real estate, want me to answer any specific questions or anything, drop them down below in the comment section. Make this video have a blue thumbs up. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.